Alright, so I tried to get this recorded, but I couldn't make it to the office fast enough to start the recording. Opened the trade up on my phone using the order block here. Actually trading on the premise that it's a market maker buy model and sending price up into the new week opening gap, which is what I mentioned this morning on Twitter. So that might be viewed as a breaker, that shaded area here. It's not a breaker. It's just a speed bump. It's going to go through that. Most traders that would be trading, quote unquote, my ripoff edition of Smart Money Concepts, they would see that as a sell. It's not. So it's going to be drawn to this buy side liquidity here. And there's an order block right there. I will add imitating this draw on liquidity. So my mind is thinking it's going to draw up to that level there. We're digging down into that down close candle. I'm going to highlight it and then add. And I can trade down to the midpoint of that, which is mean threshold right there. That's good. That's not a problem. But my obsessive compulsive disorder won't let me leave that trend line the way it is. All right, so let's run on over here, add 5 more contracts. And it's going to want to vault quickly to take out the high of the day that's noted here where the buy side liquidity is. I'm going to lighten this up. It's a little too dark. All right, so I want to see expansion, a lot of speed. Good stop to break even. So I already know I'm on side now. On side means I'm right. Well, let me rephrase that. I'm most likely right. And it should be aggressively trading to the buy side and then up into that new week opening gap, that shaded like orange level. If you're not following along on Twitter, it isn't going to make much sense to you why it should be doing this, but I commented on this morning. Okay, the most recent down close candle. Watch that high of that candle to its open. That'll be a very sensitive price point. I'm not going to add any more to the position though. I tried to upload this in a very short version, like the 2-minute stinger videos, to Twitter, and it wouldn't let me do it, not even without having any music attached to it like I usually do. But I'm sure some of you are going to be like, oh, I like this better. So you can see how we reacted off that order block, as I mentioned moments ago. Now we just ripped into the buy side liquidity, which is wonderful. Everything's going to plan. So I want to see it draw up into 4076.75. That's the low end of the new week opening gap. What that is it's the gap opening on Sunday's trading. So wherever we opened up from Friday's close, the difference between the opening price, the very first tick on Sunday evening, that's the new week opening gap. Okay, I want to see it expand up in to that shaded area. I'll draw it down somewhere you can see it. Now we've tapped into buy side liquidity, so it could pull back a little bit. There's a small little fair value gap just formed if this candle closes. Okay, so the fair value gap right to the left of us now, 2 candles back. What I'm measuring here is consequent encroachment. I'm going to take 80% of the position off, which will be 20 contracts. All my attention is here, not elsewhere. Okay, and if it gets to 80% off there, my thought process is it'll try to go to the top end of the opening on the new week, that gap, to the high end of that shaded orange area. But for right now, my mind is focused on it getting to the bottom of it where it says draw on liquidity. If you look at the high that was formed approximately at 320, that short-term high was broken to the upside, and I bought inside the first down close candle as it was going down. I'm buying into that. I'm annotating it as an order block. It later touched it again. I didn't add anything there though. I'll show you the executions momentarily. Within striking distance of that new week opening gap, again, understanding narrative prevents you from falling victim to pretending you understand what my PD arrays are, because otherwise, in the hands of a neophyte or a fraud that just tries to sell my stuff with the labels and such, and hindsight picked, cherry picking things that I don't do. Here we are, hitting the new week opening gap. So it could pull back into that fair value gap just below the buy side liquidity pool. I would want to see it support that if it drops down into that, and I want to see an immediate rejection of that and then go higher. There we are. So I would want to see it snap higher. But not knowing what the narrative is and how to really use the concepts I've authored, one would look at this shaded pink area and assume that was probably a bearish breaker. No. And I'll go long in that. You have to know what you're doing, folks. Otherwise, you'll hurt yourself. And if you're trying to pretend to be a guru with my things, you're actually harming people through ignorance. I know it sounds like I'm trying to prevent other people from making a name for themselves, but none of you are there yet. So now, since we hit the bottom of that new opening week gap, my focus is here, which is consequent encroachment, which is the midpoint of a gap. Any inefficiency, the midpoint of that is consequent encroachment. It's always abbreviated as capital C, period, capital E, period, in my charts and annotations. There we go. So we're looking for off that fair value gap. Now it should be a lot of momentum and spring out of there. Big caffeinated candle right there. Yes, indeed. Thank you very much. I'm just waiting to peel off 20 contracts as soon as we touch that consequent encroachment level. It's really fun to be on these types of trades. And there we are. So I'll roll the stop up, lock in 2,000. Okay. And now I have the lines portion of the move already put down. So what I'm watching is, do we find some support without leaving that lower quarter of the consequent encroachment to the low of that shaded area? I want to see it reaccumulate and start expand higher. And our stop is admittedly very close, but I don't care. Because at this point, tomorrow's FOMC, it can do anything it wants to do here. It can get reckless. It can just keep on going. So it makes no sense for me to let it come all the way back down into that blue shaded fair value gap and lower. So that's why I have my stop there. If it takes me out, I'm happy. I'm fine. But now my focus is I want to get to the top of that new week opening gap, which is the shaded area. So I'll start peeling off singles. This has already been done, so I'm going to change the annotation to percent has been taken off here. And I'll drop my contract selection down to 1 contract, and I'll start peeling them off. As we dig into the upper half of that new week opening gap. So what I'm doing is I'm watching. See those relative equal highs that's formed right now on the right chart, at the 1 minute chart. I'm going to wait and see as soon as it prints another candle just above that, I'm going to take one off. This is called running down equity. Every time you're in a trade and you have the ability to take partials, and it's a move that's been delivering for a little while now. This is a little bit of a long-winded run here. So I don't want to spend too much time holding on the bulk of my remainders. So I got 5 contracts. I'm going to start peeling them off. As soon as that candle starts to print right above those relative equal highs I have noted now, as soon as it prints just above it, one tick, immediately one contract's going to come off. Here's one of those real bull flags. I'm looking away from the monitor right now. I'm realizing I missed the opportunity to do it, so now I have to wait. I looked at it and I was like, oh, what the cuss. But I'm confident it's going to run up to the top end of that new week opening gap. So you sit here and you just wait. Now, when I'm going to watch and see when it makes a higher high, then it's already printed there on that candle. And as soon as it does, then I'll peel off one. I'll sell one at market of the 5 I have on remaining. There you go. And I'm going to be watching halfway between where it is now and the top of that shaded area. Approximately, my eye is looking for it to reach up into that. And when it does, I'll take another one off. I just peel one off there. So 3 contracts remaining and just a little bit more. I'm looking for it to pop up about. Now, as a new trader, this is going to be nerve-wracking for you because you're afraid it's going to, okay, I'm going to peel off there. And then at the top of the range, and now I'll want to roll the stop on that final balance. And if it takes me out, I'm okay with it. This is a beautiful price run. Absolutely gorgeous. And there's the stop. So I'll show you the executions. You can see they're not on a market replay. Hope you found it insightful. Until next time, be safe.